It shouldn't be a surprise to hear that Mirror hasn't really been growing much for the past 6, 7 months or so. Well, I have a few solutions that I think would really bring a lot of attention and focus to Mirror. But first, welcome to Crypto Saver. So, for those of you that are unaware, Mirror is a project on DeFi where you can trade synthetic assets. So if you want to buy some shares of Apple, some shares of Google, shares of Square, you can do so in DeFi using UST, for example, the stablecoin for Terra. Ever since its launch and it kind of began gaining steam in the spring of 2021, we haven't really seen much from Mirror. If anything, the attention towards it has been dwindling. And this shouldn't come to a surprise because let's take a look at the platform. So this side here, this is typically where you would provide liquidity. So if you're going to be doing some yield farming on the long side or the short side, you can do so here. Now, if you're more interested in actually trading these synthetic assets, there's mirrormarket.finance where you can do so. It's a bit more friendlier to it. But if I compare this, if I compare this platform to, let's say, Thinkorswim on Ameritrade, and maybe you can compare it to Fidelity or Interactive Brokers, it's clear that there's no way for this sort of platform to compete against a platform where tens of millions, if not hundreds of millions of dollars were spent to make it more trader friendly or investing friendly. Now I have to ask myself, why would I want to purchase a share of Apple on Mirror as opposed to doing it through my brokerage? If I do it through Mirror, I would end up paying more in trading costs. I would end up having considerably worse liquidity while doing so. The spread is that wide. The price that's quoted is always at a premium. And that premium sometimes is a plus 2% premium, sometimes it's a plus 5% premium. So good luck trying to decide whether or not you can even short the asset and make any money on it. Couple that with the fact that last time I checked, the fee for closing a short was 1.5% of the total value of that position. And then the final point, again, the platform itself. So where I think that Mirror is going wrong is that they have a platform that is set up that is probably very specific towards a group of individuals in this world that cannot access these assets on their own. Now, when I look at the majority of my audience that watches my videos, and all my videos are on Terra, the vast majority of my audience tends to be in the US, in Canada, in the UK, and Western Europe. In most cases, all these people have access to all the stocks that we find on Mirror. So they have no reason to go from trading these assets in their typical traditional finance company over to Mirror. So I think Mirror is trying to compete in the wrong way. So what's my suggestion? Okay. So I think Mirror needs to take advantage of the fact that they are separated from all the red tape that occurs in traditional finance. And let me explain. If you have a clever idea for an ETF, you can't just open one up. I cannot do it. You probably cannot do it, right? You have to have proper licensing to do so. You have to go through a regulatory process. There's probably so many restrictions in terms of how it is done and how it is set up and how it is monitored and so on. Well, Mirror can kind of get around that. There's no true regulatory restrictions there whatsoever. So why doesn't Mirror try to introduce products onto their platform that do not exist in the typical exchanges? Why try to compete? Why just have Apple on Mirror while you're competing against Apple on Fidelity? Mirror should have its own product. I'll explain some more. So what you're looking at right here, for those unaware, there are short sellers on the market, for example, right? Now, short sellers, they typically do investigative research on a company to see if they could find out if the company is committing fraud in any way. And if they do find so, they release that to the public. And depending on how legitimate their research is, typically those companies start to plummet. And if it comes out to be that what they said, the short sellers, if their research comes out, that it's completely true, that those companies end up trading considerably lower once that's brought into attention. I mean, the biggest one I could think about is Nikola, right? Once we found out that the trucks weren't even powered in their commercials and so forth. Well, Hindenburg is one of the short sellers, right? So what I have right here is an Excel sheet showcasing their performance for the past 2 years, right? So we can see what ticker they went after, the release date of their report, what the price was right before the report, the current price that stock trades for right now, and this is updated to today, January 13th, as well as how much they gained from this short position. Obviously, if it is in green, that means they profited from that position. Now, if we go all the way to the bottom, we can see that if they opened up that short position right before, and if they've never closed that short position ever in these 2 years, never took profits, they would still be up 51% on all of their calls. So what I ask is, why can we not have like a basket of stocks or an ETF that kind of tries to follow some sort of strategy? Because no one can come out on the stock market and release an ETF, let's say, that follows the Hindenburg shorts. I mean, that's never going to happen. But it could happen on Mirror, right? Now, if this sort of strategy was employed on Mirror and people were investing into it and they were getting positive returns into it, then people might say, wait a minute, I cannot get access to this strategy on the stock market. I could try to do it manually, but I can just bring some money over to Mirror and just put my money into this ETF that simply shorts all the companies that Hindenburg shorts. Now we start competing on a different level field. Now we're not comparing apple to apple. That's actually a cliche there. We have our own product, and we're able to go around all the regulatory restrictions that occur of opening up something like this in traditional finance, and we can open up something like this, say, within weeks on Mirror, and we can have it functional, and we can bring attention to it. There's a meme going around right now about how Nancy Pelosi is such a great trader, and her track record for the past decade has been phenomenal. The trades do get posted online on Twitter and so forth. Why not create an ETF that simply, if Nancy Pelosi buys these stocks, now I get it, sometimes she buys options, that's fine, just consider them to be shares. If she buys some new shares of options in a new company, throw them into this basket, let people invest directly into it. Again, now we're competing on a different level. We're providing a financial product. Well, maybe it's not the best thing for me to say financial product, because then might be referred to as a security, but we're providing a product on Mirror that cannot be replicated in traditional finance. And that is where I think Mirror can actually start getting an edge and start attracting more capital to the platform. I've even read interesting studies of how people simply short the most talked about stocks on Twitter, right? And now we know vast majority of people, if they're hyping up a stock and you're talking about a stock and it's everywhere on Twitter, it's likely too late to go in, right? So if you try to create an ETF, I think there is an ETF out there. I think it might be called Buzz, and I'm sure it's not doing too well. I'll throw up a chart of it. They try to go long based on the sentiment on Twitter about specific stocks. I think you might be better off going short on that. Same thing. Create an ETF on Mirror where you basically short all these stocks that are extremely popular on Twitter, right? Typically, majority of the audience is voting for one direction. They're usually wrong. That's just how it works, right? The reason kind of why they say, retail is dumb money. But whatever the strategy is, I think creating these interesting little baskets of ETFs, your own product, it doesn't have to exist there already on traditional finance. I think that's how we bring attention to Mirror. Now, I get it. This isn't the easiest thing to implement, logistically speaking. Right now, how the Oracle pricings work, they try to pull the prices, obviously, off from the actual stock market. So if you have an ETF, how do you properly price that? How do you even implement something like this? Obviously, someone would have to build some sort of bot to even implement, let's say, something that's based on the Twitter sentiment, as I said, or something that tracks Nancy Pelosi's trades, or something that tracks the Hindenburg trades, right? There would have to be something built specifically to be able to take that data from that too. So logistically speaking, I do not have a solution there. Someone smarter than me, I'm sure, can come up with a solution there. But I feel that if Mirror takes this path to creating its own products that are unique, that cannot be replicated on the stock market, that is when money will flow into Mirror. I might even be interested in something like that. It doesn't necessarily have to be profitable strategies over the long term. We know that typically it's extremely hard to even beat just buy and hold of the S&P. I get that. But even creating something that's interesting enough to get people hooked in and say, wow, I have choice between 5 or 6 weird little ETF strategies here. Let me throw some money in. I think that's a big step for Mira. Now, if you agree with me, let me know in the comments below. If you have your own ideas of what Mira can do to kind of turn itself around, because when we look at the current TVL, so how much has been locked into Mira, it's just below 1 billion, and it's kind of been at this mark now for like 6-7 months. Even though Terra as a network has grown exponentially, I mean, Anchor has grown several times fold since the summer. Mira has essentially flatlined, if not started to drop low. I mean, even if we look at the liquidity here, the liquidity since October has dropped from, combined, 770 has dropped all the way to 400 million here. So it's on the downslope. So something needs to change radically for Mira. And I do not believe that adding in new stocks is going to solve it, because if we look at the governance here, we can see that, right, people voted in Berkshire, people voted in NVIDIA. But what else do we have here? They're trying to rebalance a couple of the collateral ratios. They're voting in Starbucks, sure, but no one's really buying these. Mira needs to attract people that are not just looking to yield farm on Mira, but they're looking to actually buy these assets, grow their investment accounts, work towards their retirement. And adding in these extra stocks is not going to make it happen, because there's no way to compete against the available tools, the platform, the lack of fees that already exist in traditional finance. Now, if you enjoyed this video, if you enjoyed my suggestion, give me a thumbs up. I would appreciate it. Subscribe for more content. I also have a Discord completely free of charge if you just want to join my little community there. Other than that, thank you for watching and have a great day.